here we go. You can see our channel is still down. I believe here's where our ATR got us out. And we can see price still fell off. Again, I was fine with the money that I made because I got in the biggest portion of the trade. I don't have to squeeze out every dollar. I did not take any of these trades because I was waiting until now. I broke over this band, which means that is over. This band identified resistance, and now is showing us support. So we had a break above, we had a pullback, leg 2, looking for a leg 3 entry point. And so I'm going to use the top of these Heikin Ashi candles as my entry point. We just got into the trade and price is moving up. I'm going to use this little cluster right here as my Fibonacci zone. Here's my stop. Here's my first target. I'm going to remove my downward channel. I'm going to use these lows, come up to that little cluster area as these highs, and then bring my channel down, providing me with a support level to get into the trade to the upside. You can see that we are pretty close to our Fibonacci extension level target. I'm using the ATR as a trailing stop, which right now will just yield me a small profit. Okay, I hit my target. We're up $4,000 for the day. I have 5 more contracts left. Another way to make targets is range box. So I could just take off of these highs and lows, duplicate this range box up, which comes all the way up into here where we have some good support and resistance. If we take from these lows and these highs, you can see that we have a 60 to 78% retracement level right in this range also. Again, this is my runner trade, and so I'm just going to use these trailing stops to keep following price up, and you can see it got me out. So I'm going to wait for price to come into the zone. Currently, I'm not in a trade, but I'm still up $3,900 for the day. I'm going to go ahead and get my bracket trade ready, which gives me the entry and the stop and the target all at one time. Okay, here you can see the candlestick is coming down into our channel zone for entry. I'm going to start following the Heikin Ashi down into that. As you can see, I got 10 trades, and every time I get a lower candle, I'll just move that down into the high of that lower candle, just like this. Now, why do I place my entry on this Heikin Ashi? Because I'm anticipating a candle to break that to the upside because I'm in an uptrend. But if we keep making lower candles and I break through that support level, it saves me from entering into the trade, like if I were to just take an entry here at that lower band line. So you can see price broke above that Heikin Ashi, and so I'm in the trade. I'm going to use this little cluster right here, put my Fibonacci retracement on it, and I have 2 extensions, one for price stop like here, and then the other for my extension target. All right, so you can see here that price broke through that zone and stopped me out at a loss of around $900, still up $3,000 for the day.